Hello, welcome to the European Open briefing for Tuesday, January the 9th. I'm BoJ, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we saw a bit of a jump in the Japanese yen this morning. This came in response to a small tweak by the Bank of Japan to its regular bond buying operation. So this wasn't a policy change, but that adjustment in its regular operation took markets by surprise. So we saw most currencies falling against the yen. The dollar had a weak start to the day, but managed to rebound at the start of European trading. We saw many currencies reverse earlier gains, such as the Australian and New Zealand dollars. The euro is generally having another weak day, mainly on the back of profit taking. We had strong Eurozone data both yesterday and today, but profit taking seems to be taking hold. The pound is mixed. It's slightly down against the dollar, but up against the euro. There was a bit of a boost for sterling from yesterday's cabinet reshuffle by the Prime Minister Theresa May. And in commodities, oil prices have hit fresh 2.5-year high this morning as oil prices continue to climb on the back of expectations of a tighter market. So let's start with the dollar. We can see dollar yen here in orange, that big drop below, hitting a low of 112.49 before recovering towards 112.80 as European trading got underway. This big drop in dollar yen came after the Bank of Japan trimmed its bond purchases for long-dated Japanese government bonds that are more than that will mature in more than 10 years. They reduced those purchases by 10 billion yen. This was small adjustments to its operations, but the markets were taken aback a bit, and also shows how sensitive the yen is to any future policy adjustments by the Bank of Japan. Although that's the end of the stimulus withdrawal is still far away for the Bank of Japan. It does indicate that when it comes, it could potentially lead to a big jump in the Japanese currency. Dollar index in purple here in the chart we can see has been edging upwards since late last week, currently trading around 92.40. We've had a number of Fed speakers coming out in public appearances, public speeches. We already heard yesterday John Williams. He spoke twice in recent days. Late yesterday, we had Atlanta Fed President Raphael Bostic. He was one of the new members of the FOMC, and he's a voting member as well. He was a bit more dovish than others, saying that 3 rate hikes, which is what the Fed is projecting at the moment, may be too much, as it could lead to an inverted yield curve. In contrast, Loretta Mester, she's supporting 4 rate hikes. We also had Boston Fed President Eric Rosengren. He didn't really comment on interest rates, but he was arguing for the Fed to target inflation range rather than a specific target. And we've got more Fed speakers coming up later this week. Moving on to the euro now, we can see that the euro is down both against the dollar and the yen. It's down around 0.5% against the Japanese yen, mainly on the back of that response to the Bank of Japan's adjustment in its regular market operations. Against the dollar, it's mainly down due to profit taking. It's hit a 1.5-week low, 1.1935, currently trading around 1.1940. So it managed to briefly rise above 1.20 early in the new year. Now it appears to have lost that handle, at least for now. Most traders do remain bullish for euro dollar. Euro dollar long positions hit record high last week, according to CFTC data, and we also had more strong data yesterday. The Eurozone Economic Sentiment Index rose to 116 in December. That was the highest since 2000. And the Centix Index, which was also released yesterday, that also beat market expectations. And this morning, morning we had German industrial output numbers. Industrial output surged by 3.4% month-on-month in November, and exports jumped by 4.1%. So all in all, we are seeing even more evidence that the Eurozone economy continues to gain momentum. Moving to the pound now, the pound is mixed. It's mostly been range-bound against the dollar in the past few days. It has hit support around 1.3520 again. That dollar inbound early in European trading has hit sterling. Yesterday it did receive a bit of a boost after the cabinet reshuffle. Theresa May announced minor changes to her cabinet, although there were some controversies with some of the moves. It didn't affect the senior cabinet, so the foreign secretary, the finance secretary, and the Brexit secretary, they all stayed in their positions, but it did boost pound euro more. We're seeing euro pound hitting a 3-week low of 0.8807. That's also, of course, on the back of euro weakness. So the next focus for sterling is the industrial output and trade figures, which are due out of the UK tomorrow. Let's move on to the Australian and New Zealand dollars now, because we can see the Australian dollar was heading upwards at the start of trading this morning in Asia. It hit high 0.7864 before sharply reversing lower. Those gains came on the back of building approvals numbers out of Australia, which jumped by 11.7% in November. Forecasts were for a drop of 1%, but it came under pressure as we saw that sudden surge in the US dollar. We saw the Aussie drop back to around to 0.7820. The Kiwi also fell back earlier. It had hit a 2.5 months high of 0.7196, and so that the Kiwi just keeps on rising and rising, even though we're not seeing much data out of New Zealand. It's basically, it could be a technical correction due to given its sharp falls in recent months, or it could be the start of a new uptrend. It's not too clear yet. Moving on to commodities, we can see oil prices here. WTI crude hit another high. Both Brent and WTI are trading at their highest since May 2015. This comes mainly on expectations that the oil market will tighten further in 2018, despite the fact that the rising US output is offsetting some of the cuts made by OPEC. We're seeing WTI crude hit a high of $62.56 a barrel. Brent hit 68.29. And moving to gold, we can see gold is down from its highs last week. It had broken about 1,320 in the first week of January. It's slowly been drifting lower. It's currently trading around $1,314 a barrel. We can see that big drop here mainly came after the US dollar surge this morning, but also due to easing of tensions in the Korean Peninsula. So today, North and South Korean officials are holding their first direct talks in 2 years. So that's obviously is also diverting some demand away from the safe haven gold. And finally, looking at today's economic calendar, we did have wage growth data out of Japan, which came in slightly stronger than expected. So that may also have boosted the yen a little bit. UK retail sales, according to the British Retail Consortium, were unchanged, 0.6% in December. Didn't have much impact on the pound. We can see the Aussie data there, and then the German data, all of which was very strong indeed. We've got Eurozone unemployment rate coming up shortly, Canadian housing starts, and JOLTS job openings out of the US. That's it from me. Thank you very much for watching, and have a great day.